Hey everybody, it is Chuck Barone. Thursday, September the 19th, 2024. A very good day today, guys. Today is my beloved mom's 85th birthday. She's alive and well, 85 years old today. Gonna have some Italian food with her tonight, make her happy. Yay, moms. Hey, did you guys see these markets today? Did you guys see the stuff? I guess the market was pretty happy with what the Fed did. They thought about it overnight and boom, blasted off today. You got new records all over the freaking place. It was wild day. I mean, it's like again, there's if you look at the scale, it's kind of stacked evenly on both sides. Soft landing, recession. But the market's acting like it's going to be the best times ever. Comparing it to 1995, when Greenspan artificially lowered rates, took the dot com boom, boom, boom off. Now they're talking about the stock market doing the same this year. Yeah, we'll see. Market's already been rocketing all year anyway. But today, great day for the markets. But before I get rolling on all of this stuff, let me take a half a second. Welcome everybody to the show. Thank you guys for your support. As always, thank you to everybody on the chat here. You guys have been keeping things going. It's kind of cool. And, everything's good and living the dream, right, guys? Each and every one of us. All right, so let's talk about markets today. Rate cuts yesterday, new records today. Now, the market was already really high, right? But it wasn't records. Now, today, the Dow Jones up 522 points, 42,025, new world record. Wow. The NASDAQ up 440 points, 18,013 on the NASDAQ. Now, this is not a new record for the NASDAQ. They're the only ones, but it's pretty friggin' close, okay? And the S&P today up 95 points, 5,713 points, new record for the S&P 500. So all the way across the market, broad-based, huge rally today. Everything goes up, everything at record highs. Everything must be wonderful and good, right? Jeez, man. Now, the market is an indicator. I wouldn't call it a leading indicator, but it's an indicator of how everybody, at least the investor class, feels things are going in the economy and how things are going. And but you see these at record highs like this, it's hard to say, oh no, recession tomorrow. It just doesn't look like it's there, does it? Bond market today, kind of a weird mixed day today. You can kind of see the effects of this rate cut, right? So you got the 10-year selling off, yields rising up 5 basis points, the 10-year at 3.74%. At the same time, you got some nibbles at the 2-year. So the 2-year actually falls 1 basis point to 3.59%. So now you got the yield curve starting to look a little bit more normal, 15 basis points between them. I'm sure that's going to continue to spread out a little bit. So the bond market's starting to look a little bit more normal. Go figure. The dollar today, well, the dollar took a clobbering today, down 34 basis points on the index, 100.63. 100.63, so it's still hanging in there, clinging to stay over 100. That's pretty much the line where, so hopefully the dollar going to stay strong. I'm a strong dollar guy, as everybody knows. Precious metals today rally up nicely. Gold up $26.90. Oh, I did not write down the total, but it was close to $2,600. Silver up 70 cents, $30.77 for silver. So nicely done silver, hanging in above $30, building that support, rallied up today. Hang on, silver. Oil today also rallies up. It looks like everything rallied up today except the dollar. Oil up today $1.04 per barrel. Now sitting at $71.95 for a barrel of West Texas Intermediate. So right where we expect oil to be, no news there really, just kind of everything is up today. Bitcoin rallies nicely as well. Bitcoin up $2,746 today, 63,095. So now Bitcoin is cleanly broken through the 60,000 resistance. Now, Bitcoin has to do exactly like silver is doing, build the foundation above 60,000, build that support up so you can count on that number as your support. All right. So there's the markets today. A crazy day, man. I mean, I got some questions, and we're going to talk about all of that. I got some questions about all of this, and well, let's see what happens. So anyway, data today, we got jobless claims come in today, more help for the Fed. They're expecting 230,000, came in at 219,000. Still elevated from what it once was when the job market was sizzling hot, but still a pretty strong job market. I did not see a report that showed me whether the unemployment rate was bumped higher or lower. But if that's unchanged, the jobless claims it shows the Fed making the right move. Now, if those jobless claims start to come down a little bit, get down to say 170,000, 150,000. Now the Fed, all this stuff's working, and the job market's going to start picking up again. Really interesting. I mean, as much as I hate to do it, you got to give credit where it's due. I mean, I don't know if it's luck, if it's amazing coincidence. I tend to believe that typically isn't what it is. If great skill by Powell, a combination of all of those things, I don't know. But so far, you got to admit, except for the real estate sector, they've kind of handled this thing pretty well, guys. Now, granted, everybody hates the higher prices. Everybody hates higher prices at the grocery store. It pisses everybody off. Higher prices for everything, power, cars, everything. Insurance especially. But overall, the economy hanging in there, man. Are you guys losing jobs? I'm not seeing much of that. I mean, so far so good for Powell. We got to see it now if he can finish it. It's crazy, crazy, right? So jobless claims support the Fed move. Exactly, they couldn't have hoped for a better number, and the Fed continues to win. Powell today, I was actually doing a little bit of digging further into his comments yesterday. It was interesting. Powell said that rate cuts themselves won't save real estate. Now, granted, rate cuts will help people afford a payment on real estate, but because prices are elevated, and so too are still rates, even at 6%, okay? Now, granted, it's not going to be those $3,000 payments we were seeing. Now you're going to get down to $2,700 or so, whatever. But what's going to happen is prices are going to rise because there's really no additional supply coming on the market, and there's going to be a ton of additional demand. So it's going to be interesting to see how all this works, but Powell kind of laying it out like real estate's on its own here, guys. He blamed the lack of supply more than rates for high real estate prices. He said the Fed can, get this word, normalize, quote unquote, the housing market. But then the supply question will have to be dealt with by the markets and the government. Interesting statement there. Am I right? Dealt with by the markets and the government. They're going to be, it can't be both. It's going to be, the markets are going to deal with it and prices are going to go higher. The government's going to deal with it and make a giant fucking mess of it. But it can't be both of those. It's going to be one or the other. And I think the government is smart enough now, at least I hope so, we'll see, to stay out of it. They've already let this thing run as far as it has. Real estate completely a freaking disaster, right? But now let the market correct itself. Let's see what happens with, if I'm a builder and I'm looking at the prices today, I'm going to want to be building. Maybe not gigantic, 1,500 house developments, but I'm a developer. This market's got me excited, not scared. Rates going to come down. More people are going to be able to qualify for buy these houses. I'm a developer. I'm building, man. Doesn't seem to be what's happening though, because supplies, even though the supply is growing, especially for existing houses, supply up. The interesting thing is though, existing home sales fell again last month. So, the rate's high, the price is high, until one or the other. It looks like the Fed's going to try to bring mortgage rates down. But until we, with these prices, until we see 3%, it's not going to really make it like it was. You're going to see if they can get it down to even 5. Most people are still going to be looking at a mortgage payment of $2,500 or more in Las Vegas, at least. And depending on the size of their down payment and how far rates actually do go down, I really don't see mortgage rates going down much further than 5.5. Even 5 might be the lowest. I think if you get lower than that, now I don't know. We'll see. I guess it's going to depend on the economy and how the Fed sees it. But really interesting stuff. Powell basically telling the real estate world, sorry guys, rate cuts alone are not going to do it. Well, what else do we got? Leading indicators, another piece of data today, falling for the 6th consecutive month, signaling that a recession is coming. These leading indicators take 10 pieces of the economy, put them together to show how the economy is going to be doing moving forward, in pretty short term moving forward, down, 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 signaling recession. But here's the weirdness, right? So you got data coming in signaling recession. Stocks at an all-time high. Bank stocks rip roaring. Meanwhile, today, Bank of America came out and said that the Fed would likely cut rates sometime in the fourth quarter, meaning October, November, December, one of those 3 months. And they're not going to meet. I think it's October is out, right? So they only meet in November and December. Bank of America today coming out saying one of those cuts will be 3/4 of a point. So what is Bank of America seeing coming for this economy if they think they're going to have to move to cut rates that quickly? I'm guessing Bank of America sees not something good, right? So it's just the weirdest paradox right now where you got so many signs pointing to a great economy and record going, everything going great. So many signs point to a recession coming, crash the economy, crash this stock market. I've been watching these markets for a long time, and I usually have a pretty good feel for which way things are moving. But this one's really weird. Now, the market's got momentum now, so it's going to continue to go up until it has a reason not to, okay? And typically that's going to be a big rating or a big earnings shock from somebody important. But we'll see, man. It's really, really a weird paradox right now. Listen to this, guys. Foreign holdings of U.S. treasuries. Now, we've been concerned about that, especially with the U.S. borrowing records of billions of dollars every friggin' year, $1 trillion deficits. Foreign holdings of U.S. treasuries just reached record levels. New record for foreign held treasuries, $8.33 trillion. This is as of July. 8.33 trillion of U.S. debt being held by foreigners. Not necessarily all central banks, but most of it. The largest holder, Japan, is a little over 1 trillion, actually reducing their holdings. China, at about $715 billion in U.S. holdings, also trimming their holdings. So the two biggest holders both selling, yet the amount of foreigners holding U.S. debt going up at the same time. Did not say in the article I was reading and the data I was seeing who are filling in the gaps there. Interesting stuff. Foreign holdings of U.S. treasuries higher than they've ever been. Big rate cuts into record markets, guys. What do you make of this? I spent a little time pondering this today because it's a very, very, very rare thing for the stock market to be at record highs at the same time the Fed is moving toward rate cuts. Very strange thing, right? Now, if the economy is so strong that stocks are earning record dollars and the market's at a record high, why cut rates at all? Right? Typically rate cuts are for a bad economy, try to strengthen it and build it, get consumers buying again and move the economy. If the economy is already strong and stocks are at record highs, why the hell are they cutting rates, guys? Very, very strange. Now, here's the thing. If the economy needs these big rate cuts, the Fed wanting to get ahead of possible recession or unemployment issues, should stocks be at record highs? How do you have both at the same time? I got to say, man, it's the weirdest time. I guess I've been saying, I'm starting to repeat myself over and over. I just got to say, I've been watching these markets since about 1985. I'm old. And I've never seen it as weird as this right now. I've seen some weird markets, but there always was a sense of where we were. Is it a bull? Is it a bear? There was no, I don't know. I mean, and seriously, I guess if you look at the stock market, you'd have to say bull. But then if you look at all the data, mixed. Jobless claims okay, but leading indicators pointing to a recession, saying that the people who steer this economy, the people that are surveyed for that, pointing to negative stuff. Guys, I'm telling you, we're living history here. I've been saying that a million times too. We get to actually be a part of something that people are going to look at this 100 years from now and read history books about this time, especially finance in the stock market, because I got to say again, I just don't ever remember it being as weird as this. Very, very, very strange, man. Anyway, guys, believe it or not, that I'm going to quit a little early today. That's what I got. Tomorrow, Friday, we'll wrap this week up. We'll see what in the hell how this week finishes, what new news we're going to get tomorrow, because it's just like every day is a big friggin' shocker surpriser, right? Let's see if stocks can hold these records. Let's see if silver can stay above 30. Let's see if Bitcoin can stay above 60. We got all kinds of stuff we're keeping track of here. We're going to keep everybody on top of this stuff. As always, guys, we appreciate your support. You guys mean the world to us, man. Please hit the thumbs up on your way out today, guys. Hit the support. Need it, man. Need to get our video out there. Our audience is shrinking, man. We need to get some more views on these videos. I will be on the comments today. If you got a question for me or just want to make fun of me, I'll see you on there. Until tomorrow, everybody, take care.